Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It is June 22nd. This will be our chart lesson for the day. And what we had, it looked like it was going to be a range day, but we really had a spike and a weak channel up, and this is two-tiered. You can see this upper trend channel line pretty much held. It was kind of hard to tell exactly where that was until we made this high here, where we made a couple of highs there. Originally, I had it up here at the top. But you can see it's fitting in that midline really nicely there. So it's no doubt this is correct. But we spiked up and went into that. And it's just kind of a weak. I mean, prices are really trending up and down, above and below. And really the last, really from about 11 o'clock till just after 3 o'clock, really right before the close, uh, prices were just sideways again. So we were kind of bouncing around in this upper tier of the channel, but you can see we're just kind of sideways up and down. And even all day we were kind of up and down, above and below the EMA. So you could really trade this both ways. Most of the trades are going to be to the upside. There's a few shorts in here. So not a lot of trades a day. It won't take long to get through this chart lesson today without going 30 minutes or whatever. So, and still have plenty of time to talk about the trade. So I'm going to back out here and where we can see it a little better, and we'll talk about these trades. Actually, before we back out, let me show you a couple of things here. Of course, first thing this morning, you wanted to measure this first leg just in case, and you measure that leg, and that's really, actually, we really started up from right there. That's the low point. And you can see the two-legged correction in there, and a lot of times that's the center of the pattern. And so that gives us a target right there. And you can see we didn't quite get there, but we couldn't get out above the channel. So the other one you would want to measure, usually the more near-term stuff tends to be more accurate. So you'd measure that one, and then you look for a measured move. And that's exactly where we went to before we made another two-legged correction. And then we pushed to a new high here, and we continue to push higher. That's because we're in the bigger two-tiered channel, and once we got back to the midline, it looked like it was going to go on down, but that's after 2 o'clock, so none of that matters. So really, we were trading this upper tier right up into the close at 2 o'clock. That would have been a great short up there if it wasn't after 2 o'clock. But anyway, also when we were coming down here, there's your first leg. You're looking for a measured leg down, and notice your little two-legged correction in there. And we didn't quite get that one, and I believe that's just because we hit the trend line and couldn't push any further. You can see the stems where they tried, but they just couldn't get it down there, and then we reversed. So, but let's back out, talk about the trades, and move along for the day. 7 o'clock actually came. I think we were right in here about to make the turn. We had this steep channel with a break and a new low, and then we had this little channel working up. It was really hard to know for sure where this trend line was until we made this swing. This does confirm it, but you really don't want to take this trade. The second entry was right here, and I believe that trade would have worked if you took it, but you really just don't want to take a second entry short in an odd spot like that. You know the trend line's not most likely not there, because if you just draw your line right off these closes here and drag it up, at the very least it might have been a little steeper, and that might have led you to think this was maybe the right place. So if you took that trade, I think it's probably okay, but it's just kind of an odd spot. You would expect it to come back to the EMA, which it does, but you just want to make sure there's enough room in there before you take that second entry short. I didn't trade it because I was looking for the trend line to be a little higher, and it was. So you see it quickly failed and went higher and then turned down. And here I felt it was better to wait on a lower high, just because you got this trend channel line still working up here. And you just don't want to go short and then have it. It did try to turn back up and see a couple of times, and it pushed on down, and then it came back, and you got your lower high, but that's not a good enough signal bar. But guess what? It gives you a second entry short with a better signal bar right here. And that's the better place to go short and look at it go. And it bounces, And there's really two legs up there. It didn't break lower right here, but you can see it moves up, pulls back, moves up. There's two measured legs there, and that's the first break of the trend line. And this actually broke higher and turned and went down. You could go short right below that signal bar, but on that reversal, if you saw the hidden second entry there, you'd want to go short one tick below that bar. And if you waited on this one, you might let it break lower and then drop a limit order back where this one was, or maybe even a little bit closer to the EMA, just see if you can get a better entry. And you probably could have gotten in that one a few ticks back, and then it drops on down and takes off. And there's a second entry short here, which you don't get a setup. It's just too much congestion there. And then it bounces down here. And again, you just don't really get a setup till it comes back to the EMA right here. And really, this was a little failed break lower. It bounces off the EMA and turns up. So it's like a little breakout pullback almost. There's another one that repeats similar to this, but that would have been your highs or your little range congestion. There's your lows. And it breaks out the bottom and comes up. I would never notice how this closes above everything else, and it is a little bit like two legs, but that's definitely congestion. You got three or more stacked up, so it's never bad just to skip those. But I like this one. If you notice the trend line, and if you see this one's played out, then we're probably going higher. So, and it did break out the bottom and probably trap people right there. So if it breaks higher, we're probably going on up. And notice how it took a couple of bars, but it did go on up. And then notice that's a new swing low. So first entry, second entry, and there's two little measured legs up there, and there's another hidden second entry right there. So that's a second entry long. It's still, it's the first real close outside that trend line, but we're not quite back to the EMA. So it's a little bit aggressive. I marked it green, but you can see it really took off after that. So again, the key would just be, do you have room to get out? Off it goes, and really you don't want to be entering this far away from the EMA, way up here for that long. And it would be nice if you would have got a short here. Notice your new high, and then you try to go in higher once, twice, and so it's a failed second entry long when it breaks lower right there. But you don't have enough evidence when it's on this side of the EMA. It's just, you're probably better to wait. And then we start going sideways. So again, you don't really get a setup. And you just don't really get a chance to go short here, at least not on my chart. Now, you might have had a little better setup here. Might have broke higher on one of these. If this would have broke higher and turned down, maybe. But there's just no real good setup there. And it was kind of hard to know because this is really your channel, and it's just a big overshoot. So you know that might lead to a reversal. And sure enough, it does. And again, you want to be careful going long here. You don't want to get long below the EMA unless you want to see some kind of trap on the other side, and you don't really get that till here. And that's not really what makes this a trap, is it actually broke lower one tick below this bar and then turned and went back up. So you might go long right above that bar. And I would also measure that leg and look for a possible measured move. And that would give you a target right here. And you see we went exactly to that, and then it corrected for a little bit. So the better entry, though, that's a new swing low. It's lower than that one. So first entry, second entry, and you get a nice bullish bar. And that really looks a lot like two legs back. It looks similar to this over here. It's almost a repeat pattern. So I like going long right there and look at it go. And once we met that measured move, it just kind of goes sideways before it breaks higher. And then you get a little two-legged correction back to the EMA and the trend line. You get a close outside this time, and it tries to go higher again on another second entry. So this one, I marked this one. The problem was you had this congestion. That's really where the highs are. But you close outside of it here, and it did break lower first. So, and usually when it's going to continue, it's going to go with the trend, and that's what it did here. Plus, you got the trend line and the EMA. There's three or different support systems under that. with the upward bias. And of course, you run up and you hit the upper side of the trim channel line. You try to go higher once, you try to go higher twice. So you got a second entry right here, and they got matching lows. And again, it's a little failed break lower out of this little congestion. I don't have the eyes on there, but as long as you got room to get out before getting back to those highs, I really just left the other line up there, but it breaks higher. That was a quick, easy scalp on a second entry. You did have a close outside already, and you were at the high, but it wouldn't surprise me to see it try to make that next leg up. And so on a second entry with a good signal bar, probably take that trade. But when it fails real quickly, if you got enough room back to the EMA, you may take that back down. It's a little questionable if you've got enough room there. It's the reason I marked it green. But if you got enough room there, you could trade that as a trap and ride it back. And see how it just works its way lower. You get your first close outside. I don't get a very good setup on my chart. And then now we're bouncing off the overnight highs. And now look how many times we tested that. And it actually broke out the top, failed, and it comes down here, breaks out, goes back and fails again, and then it bounces. And finally you get a close outside of this. And that's really a second entry long. Notice that high, first entry, then it comes back. So when it breaks above right there, that's a second entry long. Again, it's a little bit aggressive, but it is like a little breakout pullback on the second entry. And we don't care as much about second entries when you're in congestion. But really that second entry forms outside of the congestion. So, I mean, when you do get a entry out of congestion or a range, if it does make a second entry, then pay attention to that. But we're not necessarily looking for second entry. So hopefully that makes sense. So you can go long right there. And then that's basically a double bottom. You try to go lower once, twice. That's what a reversal usually looks like above the EMA. Go long right there. Nice signal bar. And it runs on up. And you just get that repeat pattern that you had right there. It's a little after 2 o'clock. You know, if it was right in the first 4 or 5 minutes, I'd probably say you could take that trade, but I don't think I'd take it that late. And that is the first break of that little channel, so it could hit the EMA and bounce. But it breaks higher, so your entry would be 1 tick below that bar when it came through. But I didn't mark it because it's a little bit later in 2 o'clock. And so, believe it or not, I went through the trades and gave them all a fair amount of time, and we're only 12 minutes and 50, basically 13 minutes here. So this is a more normal day. The volume and the volatility. The volatility is still a little high. There's still some rather large signal bars. And I continue to get that question about the signal bars. If you go to the website and read our frequently asked question page, I give you some options of how to handle that. One of them could be that if it triggers too quickly, or if it's too big, if you think the signal bar is too big, let's just look at one of these. Let me explain it. There's a couple of different ways. Let's say you want to enter right here, and this bar is really big. Let's see. That bar is 13 ticks. So in order to enter it, you got to put your buy stop 1 tick above it, and your safety stop goes 1 tick below it. So that's 15 ticks you're going to lose if you're wrong. That's basically 3 points, which lately that's not huge, but that's still a big bar. You can't do it within the 8 tick rule. So you almost have to throw the 8 tick rule out right now because the volatility has just been too crazy and the bars are too big. So that doesn't mean that you enter the trade and you still keep your stop within 8 ticks because of the volatility. That's just too close, and you're going to get stopped out on a good trade. No matter what you do, if you enter the trade, your stop has to go 1 tick below that signal bar. If you're going short over here, no matter what you do, your stop has to go 1 tick above that signal bar, and you don't move it until you scalp out. So make sure if you don't understand anything else, you understand that. We always enter 1 tick above or below our signal bar, and our safety stop goes immediately to the other side, 1 tick above or below the other side of the signal bar. And there's no moving to the next bar if you don't like the signal bar. Don't do that because you'll just cause yourself to have losses. So assuming this triggers, you could drop a limit order back here within the 8 tick rule, and hope you get filled, you're going to miss the best trades. Like right here, you probably wouldn't have got in that trade regardless because it gaps over. But you might have got a limit order right here, one tick above it, and you might have got filled, but I doubt it. So you're going to miss the best trades, even the ones that back up and fill those little gaps right there. So it's not, you don't want to use a limit order unless you've got no other option. If you miss the trade like this one, if it went too fast, you could try a limit order. Or if it's too big a signal bar, you could try a limit order. The other thing you can do is you could figure out however many extra ticks, like right here, this was 13 ticks. So 13 minus the 8 tick rule gives you 5 more ticks. So take those 5 ticks that it takes to put your signal or your safety stop down here and add them to your target. So instead of scalping out for 4 ticks, you scalp out for 9. Now, I'll be honest with you. I tried that for a little while, and my win percentage started tanking because I wasn't winning as often because my scalp had to go a whole lot further, and so I'd get stopped out more often. So I stopped doing it, went back and said, I'm not going to worry about it. I'm going to put my safety stop where it goes. I'm going to enter. I'm going to scalp for 4 ticks. I'm going to do everything like I always do. I'm not going to care about the 8 tick rule. And my win percentage went right back to normal again. So just as I suspected, it actually reduced my win percentage. So why try to fight a risk reward program that all it does is cause you more losses? It's don't believe all the stuff you read. I mean, if you're trading and swing trading and you got a strategy that only wins 50% of the time or less, you got to have a risk reward or you go broke. But when you're doing what we do and you win at an 80% clip, you don't have to worry about that because the odds are you're going to get your 4 ticks before it's going to move 13 ticks in the other direction and also break below an important support and resistance area. So that bar is an important support area right there. So for prices to turn and go further that way before they go 4 ticks in our direction, then you just read it wrong. So try to understand that. What we're doing, you're better off to just put your stop where it goes and let it go. Trade it like always. But don't listen. This is what I always tell people. Don't believe me. Don't listen to anything I tell you. I wouldn't say don't listen to anything I tell you, but don't just believe me. Go test it on the simulator. That's any idea, theory, things I start to notice. Before I actually trade them or share them with you guys, I test them thoroughly on the sim. And that's how I know if they work or not. Test everything. Prove it to yourself. Don't just believe me. Take what I tell you and test it. Prove it to yourself. And then there's no question. You don't have to ask me. You know. And trust me, I won't share it with you until I've tested it and I know it works. And so my belief is you're better off just to trade like always. Put your stop where it goes and don't worry. Now, if it's 5 or 6 tick bar or 5 or 6 point bar, maybe you just skip the trade. That's the other option. Sometimes a trade's too risky and you skip it. And if you start looking at a 5 or 6 point bar, and maybe either you skip that trade or you try one of the other options, and if you miss it, you miss it. It's just the way it goes. Because there is a thing of, you don't want to add too much risk. So, but if a bar's 2 to 3 or 4 points, I don't worry, and I'm outside the 8 tick rule, I'm not worried about it. I really am not. And there's been times I've taken probably 5 or 6 tick point bars, and I didn't worry about it. But I won't do that all the time. It just depends on what the market's doing. If it's real choppy, you better be real careful because you can get chopped up. And but if it's trending really well, I'm not going to worry about it as much. So anyway, that little bit added a few more minutes, but I'm going to wrap it up. Hope you had a good trading day. It was kind of quiet. There's not a lot of trades here. Several of you asked me about. Actually, there was one trade several of you asked me about, and I think it was right here. I think this was the trade people asked me about because there's a first entry and then a second entry. Or actually, the second entry's right here. I think this is it. I can't remember now. First entry, second. I think it's right here. I'm not sure. sorry, I can't remember. But a couple of people asked me about the trade. It was the second entry and it failed. I think it's right here. But where they were off was on this trend line. There's a little close outside and a new high. And if you don't see this bigger channel, then you don't realize prices are probably turning down there as well. So there's a lot of information that prices are going to turn here. First, you got to close outside a new high. Second, you didn't get back to the upper side 3 times there. And so either there's support, which you can draw the support, resistance. You draw the resistance line, but there's also the trend channel line, and you can see it was causing resistance. And so it's time for prices to go the other way. So that's where I think people were getting tripped up. And there's not a very good signal bar on my chart, and I think the people that sent me their chart, their signal bar was awful as well. It's an inside bar on mine, plus it's more of a neutral bar. It doesn't close high enough. One more tick down, it closes right dead in the center. But a couple of people had dojis there and stuff, but at least 2 or 3 people got trapped right there, and they're thinking they're staying with the trend, but you're not seeing the big picture. You're missing the big picture. So make sure you draw all the stuff on here and you know what's going on. And if you realize there's a trend channel line there, odds are don't be going long right here below the EMA. Actually, you probably would have gone long above it, but you can see it close below. And I think the way most of you looked, it was a double top, and that was, so you could count that as a second entry, but that's actually well, you get a new high on mine, so it's a first entry. But assuming you didn't have that little jog up right there, so it would be a first, that'd be a double top, and all that moved down, I just count that as a first entry. Especially knowing that you got strong resistance up there. So keep that in mind. But I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.